Good afternoon, traders. This is Christian from Hertz Trade Group, and it is Tuesday, January 8th, first day of the week. Well, I will try to sound somewhat optimistic or positive today, but it's not easy to do that. Looking at the price action for the day, so I will go through the numbers here and the theme of the day. Risk disclaimer, of course, right here. Everything that we're going through is for information purposes only, not giving out any advice or recommendations. You could read the full risk disclaimer right here. So yeah, really ugly price action. SPY was down 1.8%, Qs down 2.5%, IWM down 3%. And the yields were down, yields were higher again. That was a big theme or a big factor, I think, for today. If you want to look at the yields, just so that you have the numbers, because I do think that this is important, and this is partially what's driving the market. Here's the 10-year, right? So this has been moving higher. You can look at this over the last 5 years. So we're now at the highest 10-year yield since we've seen, before the pandemic, right? That hit in the beginning of 2020. Let me just shut this off here. All right, there we go. And to look at the other yields, right? So if we bring up US, right, you could see right now the 30-year yield is about 2.2. 1.9. So you might be asking yourself, well, geez, these yields aren't that high, right? And again, we're talking about the long end of the yield curve, not what the Fed is doing. Remember, the Fed is when they increase interest rates, that will be the overnight rate. So not even 2-year, right? So on the very short end of the curve. But right now, the market is moving ahead of that. And as the more and more higher rates go on the long end of the curve, the more that you have to basically discount earnings, right? Which is a part of equity valuations that you look at, right? When there's higher and higher interest rates, right? The future cash, let me see if I'm saying this right. It's the end of the day. The future cash flows are discounted back at a higher rate. So that future growth rate becomes less and less because of the higher dividend, if you can understand that. And at the end of the day, it's not good that yields are going up and that they're going up quickly, right? So we could look at this, and I think this was, definitely a factor for the day, right? Is that we're breaking below. Now remember we had this little oversold bounce about a week ago, but we are just coming down quickly, right? And when you see these big red candles, right, sometimes they're around Fed days or some type of economic release. But right now, we are now taking out the low of what we saw back towards the beginning of 2021, right? A little more than a year ago. So that is kind of a major catalyst, a major factor, as I said. Besides that, we could look at some levels in the S&P. And then I will give you my 2 cents on the market right now. But 45.55 is a support level that I'm watching, right? That's the bottom of value for the month of January, right? This again is using volume at price, right? And we're basically drawing support and resistance around last month's volume at price to come up with a pretty valid support level of 45.55. So that's something I'm watching, but and I think that would be constructive if we can hold that level and bounce from that level. But besides that, there's a lot of ugly things going on here. I do also use the moving averages. You hear me talk about them a lot. 200-day moving averages down here, 50-day moving averages right here. This is now a decisive break of the 50-day moving average. We're kind of trying to hold on to it, and kind of oscillating a little bit around. You had this kick save in the beginning of last week, right? And then you had a somewhat constructive candle. Even though it still closed below the 50-day moving average, it looked like it had the chance to kind of reverse. Not so much. And usually what's kind of different about this market, well, there's a lot of things that are different about this market than we've seen in the last couple of years, but we are just seeing a number of the times where we come in and we're down around 1% and there's no bid, there's nobody buying that dip, which is much different. Usually, and I even said in the pre-market session, Tribeca Trade Group. I said, hey, I would rather have us come in today down 1% than like flat, right? Because we just think, I think then you have more of a psychological, it's more of a psychological factor that sometimes people will really kind of come in and buy the dip when they've got an opportunity where stocks are down. But you could see from this price action, and this has kind of been the same all month, is that we are just not seeing any conviction. Friday, what I hinted at that, and I hinted at this kind of like towards the end of the day on Friday, that we might see some short covering where the market would actually kind of bounce a little bit. And we got, a bigger bounce than I thought that we would on Friday, which is what, back here, I think back here, right? Yeah, this is, yeah. So in any event, back here, all the way back here, right? That was the bounce that we got. But yes, I believe that was, the shorts and longs didn't really want to have a big position over a 3-day weekend. So it looks like shorts kind of reasserting themselves. Overnight market was weak, and then we try to kind of rally back here a little bit till about 250, and it looked like we were trying to basically turn the corner. Market breadth was improving, the VIX was backing off a little bit, and then it just seems like the market kind of got hit with another big selling program, coupled with the move in interest rates. Right, once they started to go lower, and I do believe some of this is model generated, right? Meaning that someone, some funds, quant funds, probably have a decent model that says, hey, as soon as rates start to go higher, right, bond prices go lower. Remember, you have to remember that this is inverted relationship between bond prices and yields. So once this starts to kind of happen like this, then all of a sudden there are programs that are basically selling equities off of that. Right, and that's what you have right around this 250. Here was the improvement until breadth, and then so that's what we've got. There's not anything else really on the 1-hour chart to notice, other than we're still above this this low from back in here. But overall, I don't think that that's something that you could really hang your hat on. Nasdaq, I thought was holding up a little bit better. You could see on the 1-hour chart that we are below value for the week, right? But we're not too far below it. We basically try to regain that towards the end of the day. Weren't able to. And if we shift back over to the daily chart, this does not look healthy to me. So even though it was kind of, they were trying to stabilize a little bit today, the Nasdaq shares. This is, so just very easy to kind of classify these things, right? And I try to do these in these videos just so that you have an idea. But when price is below value, right, and price is below the 50-day moving average, 20-day moving average, below the 5-day moving average, it's not a good thing, right? It's a weak market, and that's kind of what we have for now. What I think everybody is waiting for, and the best, if you're playing this market mostly from the long side, it's better, trying to basically sit with a higher cash balance and just waiting for when this distribution ends. And we don't really know when that happens. And then there's a couple other, I'll get into some of the sectors and so forth, but I wanted to bring up the IWM chart, which we've talked about now for a while. You could see what's going on here on the daily chart, but it's even more evident when you look at the weekly chart, which is something that we've been looking at for a while, that once, we kind of hung on to this just barely. We closed right at the bottom of value for the year on Friday. So it said, hey, try to be optimistic, and maybe we can kind of bounce off of this because intraday we were much lower, around like 12 o'clock on Friday. But you can see this is a decisive break of the of this year's value area. Again, it's still a developing bar. We still have 3 more days of the week. Today's Tuesday. So we got Wednesday, Thursday, and Friday before we see the end of what this red bar looks like. But you could see this is really looking, this is not looking good. And I've got a small hedge on. I've got an index put spread on in the Russell 2000 RUT. So I've got that for the end of the week. So a little bit of a hedge, but I'm certainly, I wish at this point I would have a little bit more hedges on, because I've been kind of peeling them off. I had another trade that worked pretty well too. That was a short trade in NVAX. All of the big vaccine makers have been looking very weak on the charts. Took advantage of that, but I actually unwound the last position of it at this point. So that's what this looks like. I was actually very surprised today at how poorly some of the names that closed very strong on Friday. Just how this market has been going this year. Very, very tricky. Applied Materials down 9%. This is a name that I talked about in Friday's video. So, this is normally a really good setup. Something closes like this, retest top of value, close at the highs. It just tells you right now that this market just is anything that looks like a constructive setup right now that is not energy is having issues like this. UCTT was another one too that was kind of building all week last week. This name was down 11%. There's no news on these companies, so this is a dangerous market while this is going on. Down 2-3%. I get those types of moves when the market's under pressure like this, but down 11%. It doesn't make a lot of sense to me to see things getting hit this hard still. And I think that the best that you could do here is not to fight this market, is just to kind of let this happen, because 11% moves like this, are just, they're startling to see, something like this take place. And again, a group that was showing, the cheaper chip names were definitely showing some relative strength. So we're also seeing this, it troubles me. I talked about this in Friday's video. JP Morgan, I mentioned that it was the biggest, I think the biggest move down on earnings that we've seen JP Morgan for over 10 years. I forget the exact date of when I think it's something like back in 2002 or something like that, but I think I'm wrong with that. But regardless, I mean, down another 4%. So again, the companies are getting punished right now if you come out and you miss earnings. JP Morgan did not miss earnings, right? They had a couple data points in their earnings report that people didn't like, which again is always the case in JP Morgan when they report earnings. Their earnings report is always picked apart. Right? I think it was trading. I think their expenses went up, something to that effect. But man, that's a big move. 168 down to 151 in 2 days. And again, nobody really kind of coming in and buying the dip. So that has to change in this market. And I'm just kind of getting to the end of this video. A couple of things that I thought were somewhat constructive was what, Boeing did finish down on the day, but I mentioned I put out this chart and I try to trade in Boeing. Actually, I'm still long it. Deere is another one, right, that we talked about that looked constructive. I guess, you could say relative strength, but again, just very difficult to find anything on the long side right now in this market. Energy is still kind of holding its own, right? Up 40 basis points, but you could see it's extended. I actually took off one trade in energy. I may have taken a target in another. So here's my trading blotter. I also took off Ford. I just thought anything that's up this much is just could be vulnerable to getting hit. That's the only reason why I took off Ford. CPE was the one. I had a target at 59 this morning. Stock was down. It actually went below my cost basis. Took it off at 55. Here is my NVAX trade that I mentioned. I tried trading a little bit of Facebook at the end of the day, and then just was, got one target in it and then had to take the thing off for a loss. So it's very difficult right now. The more that, again, I'm not going to give any advice recommendations. I can't do that, but I will tell you that when the market is acting like this, preservation of capital and as well as confidence is of the utmost importance, because it's really difficult to kind of, come in and think, oh, geez, a name's down 5%, usually that would be a buy the dip type opportunity into support, and it falls another, 4 or 5%, so this market's very dicey. I'm waiting, so what do I want to see? I think number one, I think interest rates need to stabilize. So you could watch either that ZB or you could watch TLT, that needs to happen. Right now, anytime that yields are going higher, bond prices going lower, it is causing a big ruckus right now in the equity market. So that needs to stabilize. And then we're going to need to see some buyers come in, right? It's been distribution. Like I said, the only thing that I thought one of the main reasons why we saw the price action that we did on Friday was because of, maybe shorts kind of covering a little bit before the weekend, but we are still not seeing any institutions really come in and really want to buy this. We are seeing some option flow, but you have to remember what option flow is, right? It's very speculative stuff, right? You can only lose the premium. So I think we're seeing more, activity where people are just saying, hey, I'll buy some calls out a couple months. And, if they don't work, they don't work. I lose the premium. I'm guessing that's what institutions are doing, because we are seeing, some option flow here and there. But we want to see the stock buying, right? We want to see funds start to really put their real money to put to work in stocks, and that remains to be seen. So for now, I think you got to sit tight for as much as you can, and try not to get mixed up too much in the volatility. All right, thanks guys. Have a great night. See you tomorrow.